our website, fitforbox.com. We've recently been featured on KTLA Morning News on April 30th, as well as in the beginning of May, we were featured on Yahoo Finance, Market Watch, and 100 other publications. And also you can find the link to the video on KTLA segment by browsing Fit for Box on KTLA website. You will see a 4-minute video about our program. Okay, I think we all are aware of the problems the local business and online communities have right now. The local businesses are struggling. You know, their advertising cost is going up. Even before the COVID-19, the customer acquisition cost and customer retention costs were increasing every year. The current advertising channels like digital media, pay-per-clicks, coupons, TV advertising, radio advertising are very expensive, and conversion rate is very low, driving the marketing ROI down substantially. At the same time, according to a variety of health organizations like CDC and American Heart Association, 80% of US adults are not getting enough exercise. This is the big problem in our society, which creates a lot of health issues like hypertension, obesity, diabetes, stress, productivity loss. So there should be a solution that helps our local businesses and online businesses to thrive while helping our communities to improve health and wellness. We believe at Fit for Box, we found the solution. What we've done, we developed a new platform, an iOS app that connects local businesses with local customers through activity trackers like Fitbit or Apple Watch. And what it does, it allows local businesses to increase traffic to the door by rewarding local customers for everyday fitness. For example, a local restaurant through our system can provide a free cup of coffee with the purchase of a breakfast for 25,000 steps. Or a gym can offer a free Pilates class for 50,000 steps. Now, our users will have to come to their doors to redeem the rewards. And that generates traffic to the door, higher revenue, at substantially lower customer acquisition cost. At the same time, our users are getting extra motivation to exercise because they're being rewarded for staying active. It's a win-win for entire community and our ecosystem. Okay, currently on our app, we offer more than 100 rewards grouped into 5 categories, such as food, personal services, trainers. We focus on health and wellness products in our system. Okay, our current customers include a variety of national organizations like GMDC, Sephora, Thrive Market, NCSL, as well as local companies like Panini Kebab Grill. You know, we also have strong partnership with UCLA Health and UCLA Anderson. For example, endocrinologists at our UCLA Health now recommending this app to their patients because it promotes their motivation to walk more, which prevents diabetes and other conditions. Okay, very quickly how the app works. When our users download this app, you know, we connect to their trackers like Fitbit or Apple Watch. And now with every step they walk, they see their balance of redeemable steps increasing. And then we design beautiful reward pages for our partners. For example, it could be a variety of products like I mentioned earlier. Then our users exchange their steps for rewards, and everything is done completely automatically because we're fully integrated with these activity trackers, with Google and other companies. Okay, the market size for our program is very substantial. As you all know, the total digital advertising, direct mailers, and other, you know, contribute more than 100 billion a year in just USA. So our TAM is $110 billion and SAM is $60 billion. Okay, we have 4 main revenue sources. There are small and medium-sized businesses, corporate brands like CVS Pharmacy or Coffee Bean, service providers like personal trainers or doctors, and e-commerce stores. The way we make money at Fit for Box, we're charging a small commission for driving traffic to the door or traffic to the website. For example, SMBs can pay us only $1 a visit, which is substantially lower than they're paying right now for driving traffic. Service providers like doctors or personal trainers paying us $10 per lead, while e-commerce stores are paying us affiliate commission, which vary from 7% to 15%. average commission is about $2 per visit. So the business model and unit economics are very simple. By having million users in our systems, redeeming slightly less than 1 reward per month, 9 per year, and making $2 average commission per redemption, this program generates $18 million a year. So right now, we're raising funds which can help us to get to 1 million active users. The total funds would be required is $2.5 million, and we're raising them in tranches. And the first tranche is $500,000. The funds will be used for merchants acquisition, marketing activities, product enhancement, and SG&A. Okay, we have 4 main channels to acquire customers and acquire merchants. Digital channels, which we're all aware of, user-assisted events like partnering with LA Marathon or Diabetes Walk or Cancer Walk, and partnerships with organizations like I mentioned, like Cedars-Sinai or UCLA Health. Right now, even though we're still a young company, our users already referred more than 4,000 merchants to our program and our app. Also, our user base submitted more than 1,500 requests to expand in their geographical areas, in their cities, states, and neighborhoods. In our market space, we have more than 10 competitors. The 2 main competitors are Sweatcoin and Lifecoin. The main difference between all the other competitors and us, while competition is focusing on providing users online rewards, which are discounts on e-commerce stores, we're focusing on connecting local communities, as well as offering e-commerce products as well. Okay, we have a wide team of highly trained professionals. They've been with us most of them been with us since beginning. And I'll be happy to answer any questions that we have about our product and about our team. Thank you very much. Do you have any questions?
This is Dave DeChapel of Pasadena Angels. Tell me about, so you have a pilot program going on now in West LA?
Well, right now we had we're actually beyond the pilot program. We had our beta program, which we finished in end of 2018, and we launched our app in App Store in Q1 of 2019. Now the app is available across all 50 states. So now we have users, we have 50,000 users across all 50 states, but our local businesses are primarily in West LA and Los Angeles area, but our e-commerce stores ship products to all 50 states.
Gennadiy, can you give me back the hosting?
Yes.
Okay. Make me the host again.
How do I do it?
Click on my name, and by it you'll see make host. David, you need to mute yourself. You need to mute yourself. When you can't talk, we can hear you talking. Okay, I'm the host now.
You can't have questions because it's going to last until midnight.
10 minutes apiece, so as long as you keep it within 10 minutes, they can do that.
Each person, there are 13 of them. That's 2 hours.
What do you want to, hang on a second, gentlemen. Here, David's calling me. So David, you can tell me online, David, what you want to have. You want to shorten the, I thought you said everybody had 10 minutes. David?
The presenters have 10 minutes, the deals.
Okay, well, he didn't talk 10 minutes. The deals have 10 minutes, right?
Yeah, that's right. We can't have questions from everybody because we got 13 people. If they got 5 minutes each, that'd be an hour. That would take us into 7 o'clock at night.
Everyone's not going to ask questions, David. What's going to happen is if a guy's got 10 minutes, he can take questions up to his,
that's fine.
Up to his 10-minute period is what you want to do.
Okay. Okay, so, sounds good.
So, Gennadiy, do we have any more questions for Gennadiy? Anyone else? Okay, Gennadiy, I think we're done, and we can go on to the next one. Thank you very much. Very
Thank you.
excellent presentation. And who's next, David?
Next, we have in alphabetical order, IDECO, if I'm pronouncing that correctly. And
That's correct.
we have the, that's good. I got it right. Okay, I did something right already this morning. Stephen Kennedy going to talk to us about IDECO.
Okay. Very good. Okay.
You're fine. I'm going to mute everybody else but you, Stephen.
Okay.
So I'm going to mute everybody, and then I'm going to unmute you. Let's see. How do I do that? Let's see here.
Got to put up IDECO's charts too at some point.
Yes, what we're gonna do is I'm going to share this, make you the host is what I'll do. Let me find you up here. We'll make you the host, and when you finish with your screen share, you need to turn it back to me, and then then you need to mute everybody else except me. Let me try to find your picture here, Stephen. Okay, there we are. There you are. Okay.
What just happened? Hold on.
Make the host.
Okay, so am I the host? Okay, so let's go to screen share. This will stop screen sharing. Do you want it? Yes, continue. Okay. Okay. Share.
There we go.
All right. Can everybody see that? Let me see if I can get. Okay. Okay.
Now, Stephen, you need to make other people but you and me muted.
Okay. All right. Hold on just a second. Okay. Let me just let me see. There's a mute all, and then I'll mute all. Okay, and then where's Gene here? Gene, unmute. Wait a minute.
Okay, I'm okay. I'm unmuted.
Okay, all right. Well, I can hear you, so
yeah,
you must be unmuted.
Yeah,
okay, all right. So we're ready to start? Okay. 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 Thank you very much, David, for inviting us to the Growth Capital Conference. We're super happy to be here because we are at the growth stage now. And so we're interested in meeting your group. We provide utility activation for new residents when they come to a new multifamily property. And we have been in a trial for a year. And we have had really good response from our strategic partner in Texas, where we had a pilot for 2,300 apartments to see if we could radically simplify how you turn on utilities at apartments and gather the customer feedback on what they were doing. That trial gathered or gained interest from AT&T, who really liked it and wanted to introduce us to their dealer network. They introduced us to their largest dealer in the multifamily space, and they loved it, moved their whole business onto our platform, and we're now at 150,000 apartments over 14 states with our activation service and marketplace, which we'll talk about here. So the multifamily market is big. It generates about 30 billion in new residential utility orders a year. There's a large turnover. There is, it's the source of 80% of all new accounts that go to utility providers, and it's basically, you would think it would be very high tech, but it's basically low tech. It's all based on call centers and outbound sales programs. And we think that whole market's really ready for disruption because it's not ready for mobile sales and the kind of expectations customers have today for being able to, why can't I just do this on my phone sort of response. So the primary problem for providers is that these rental accounts are short-term, they're low margin, they really don't like them much because they can't hold on to the customer and raise the price over time because people move. They push these sales out to their dealer networks, but their dealer networks are, you know, it takes a long time to update prices in there. And then on the reseller side, these dealers, they have very poor visibility into the properties themselves. And they are marketing companies, and they're just really want to grow their business, but they don't have the technology or the capacity to grow their current call centers without a significant investment. And this problem exists primarily because these are marketing companies on both sides. They're not technology companies. They're not looking at the fulfillment piece. They are looking at the marketing piece. And so the fulfillment side of the business is advancing very rapidly. And so that's what they're behind on. They're behind on the technology, and that's why they're responding to us. Our solution is to create a marketplace at every location. So it's basically one-stop shopping on your mobile phone meets location-based marketing. And you can buy all the utilities, set everything up, do the whole thing in 5 minutes, and you're done. It's so super convenient for customers, and it basically creates this common platform where they can manage all their utilities in one space. So if they want to change utilities, they can do it right through the app and get another provider, but maintain our account. So how do we make money? We make money when the customer buys something. They will buy something with a gross market value of, let's say, $700. That might be an electric account or a cable account. There's a commission generated. We have intermediaries, which is the dealers who we partner with. They take about $35. What's left is $28 at the end of the day. That is in our competitive energy markets. There are two types of markets out there. There's competitive, what we call deregulated markets, and then there's regulated where they're public utilities. We make less money there. I'll show you that in a second. Today, we are in 690 properties. We're transacting 2,000 transactions or customer orders for AT&T products currently through our system. We're managing about 150,000 apartments, and we expect this contract to lead to about $1 million a year at its present size. And then what we're raising money on is to expand that into all the other possibilities that are out there. This is just a quick, it might be a little hard to read. This is our unit economics. You can see our gross margins about 43% and on deregulated markets and 23% on regulated. But basically in the deck, you can see that they're per transaction cost and per unit cost account, that sort of thing. I just want to draw your attention to one number down here. This is $8.42. That's the average amount that we expect to earn from a unit. So if we had 1,000 units, we'd expect to earn $8 against those 1,000 units. That is where we're starting. So where this goes is our current 150,000 units are at about $8. That's through a company called Slingshot. It's this big multi-family dealer. But the rest of AT&T's network will not get quite as good a deal as they got. And they're very open to this pricing where we'd make about $20 a unit. There are about 200,000 units in that space that are controlled by these AT&T dealers. But the real money is in the direct to property, which is where we started with Wilmax, our strategic partner, where we did the pilot. Those things, we make all the commission. There's not an intermediary. So we make about $90 on those. And there's 17 million units there. So it can get big. In our pipeline right now, we have Slingshot, which is our lead. We have, and then we have 3 other companies that are coming in. The one that I want to draw your attention to is Infinite Energy. This is an electric company that has a gas operation in Georgia that we think is a model for going forward. We think we can make about $90, $89 on those transactions. So that's exciting. This is our team. I've been in the business for 20 years building software. Ben Mulliken is our tech lead. He's super good, runs a team. And then we have Turner Massey is our insurance agent. He is, I'm trying to get a, okay. Turner Massey is our insurance agent. And then we got Grant Hobbs, who's kind of brilliant guy. And of course, Jay, who brought us here today, ran a digital agency in Chicago, in San Francisco. Getting a little going too fast, sorry. He's got just a great feel for marketing. We're trying to raise $4 million or $3 million, I'm sorry. And we're going to use that money to grow our sales and marketing team, and then build the kind of products that we want to, that are bringing people to the marketplace itself. You know, we've already got a group of onboarding tools. We're just going to enhance those with these and grow this out. And that is our presentation. Okay, hope I got in under 10 minutes there. And if I can turn off this bell, I will.
You did, Stephen. That was
another minute, Stephen.
That's right. You've got a minute or two, Stephen. If there are any questions from the group, we'd love to hear from you.
I wonder why this is. I guess there's not. Okay. Okay.
Okay, and I'm going to reclaim the host here.
Okay, can you do that, or do you want me to do that for you? I think I need to do that.
I think I'm the host now again, or you can move it over too.
Great.
I think I'm the host now. So
very good.
So in that case, what we will do is go to the next one, David. Who is our next person? David doesn't know that he's muted. Okay.
There we go. There we go. I got it. I'm going to learn technology before the end of the day.
Okay, David, who's next?
Next is InteliGlas.
Thank you.
You got the view there?
Thank you. Okay, so I'm going to share my. Thank you, David. I spoke over you.
When you call them out, David, tell me the name of the person as well as the company.
Robert Granadino, InteliGlas.
Okay. I guess he's the only Robert here. I don't see a picture of Robert.
Yep, I'm here.
Okay.
He's the only Robert that we have on the 6th person.
So Robert, I'm gonna make you the host. You need to mute everybody and leave me, and then unmute me.
Okay, I'm looking on the participant list here. Okay, mute all, and then I'm going to unmute you, Gene.
Yes, I'm unmuted. Thank you.
Okay,
and you go ahead with your screen share.
Okay, here we go. All right. All right, everybody see my screen?
Yes.
Okay, terrific. Thank you, David. Thank you, Gene, and the advisors and investors on this call. I'm Robert Granadino, COO, co-founder of InteliGlas, an American company based in Pasadena, California, with proximity to our partner over at Caltech. So our value proposition.
You should make those slides full screen.
Larger? How's that?
That's good right there.
Okay, terrific. So InteliGlas is the industry's first autopilot smart building platform. It's designed to automatically save more than 20% energy annually, lowering operating risk, and with unlimited integration to third-party technologies, and open the black box of data access and control for owners and facility managers of mid-sized properties. The leadership team, we make money for our investors. Scott Martin is our CEO and president. He leads the commercial real estate owner relations and sales strategies. He's a 31-year veteran of office building and leasing. He has sold and invested in over $1.5 billion in commercial real estate and leases. And he's a member of the prestigious Society of Industrial Office Realtors. Eli Kaiser is our CTO. He leads the technical vision of the company, 25 years, award-winning full-stack engineer from Sun Microsystems. He created for the environmental industry a 600-site global network for landfill and Superfund sites, which the architecture is, InteliGlas's architecture is partially based on. We've got Mohammed Mousavi, who's our Director of Integration and Controls. Mohammed handles all of the integration, in-field integration at office buildings around the nation, manages our integrator or system integrator network. And I lead the business vision, the strategy and growth. I've got 28 years of Silicon Valley experience at cybersecurity companies like Symantec and Fortinet, also a founding member of the executive team at Boingo Wireless, Toshiba, and I created the broadband network that is a multi-billion-dollar Earthlink broadband business. That's the executive team. Our revenue model forecasts production. Property owners are our customers. So this is the model in the upper section. The recurring monthly SaaS service revenue is $3,500 to $9,000 average per month, with an 85% gross margin at 4.5 cents a square foot. That's how we measure the fee. Non-recurring installation revenue is $45,000 to $85,000 on average. The setup fee is approximately 70 cents a square foot at 50% gross margin. As I mentioned, we're already in revenue. We have over 7 properties. I have done $725,000 to date. We have 15 active quotes in the pipeline, representing $2.2 million in revenue, and over 100 building conversations representing 4.6. Our revenue forecast in 2022 ends with 3,144 buildings. Signups, that's recurring revenue at 124 million and non-recurring at 280 million. So our mission here is really about making the world a better place, lowering the Earth's carbon footprint. Owners benefit in the gross lease by creating greater asset value through operational cost reductions. Tenants benefit on triple net leases with remarkable cost savings with our 24/7 autonomous AI. As I mentioned, we sell to property owners, REITs, office portfolio execs. They're our customers. They buy from us. The addressable market is over 5 million office buildings, mid-sized office buildings in the United States. That's 90% of the total building stock in the country. And I'm going to play a little video here that is our browser-based application. You'll get a better idea of what I'm talking about.
Yeah.
InteliGlas is the first global smart building platform designed for owners and managers of mid-sized office properties. This is the login screen to InteliGlas's user application, here showing a top-down view of all the property's building systems. To the bottom right is power consumption monitoring. Ripley AI, InteliGlas's artificial intelligence system, uses power consumption data for much of its power cost savings autonomous action decision-making. The Ripley AI system is also designed for predictive analytics, identifying system breakdowns before they happen. InteliGlas microsensors and cameras positioned throughout the building property capture attributes such as occupancy, humidity, luminosity, temperature, and air quality, just to name a few. Control of a building's systems are effected through the device management window. Trending data and reporting is available for all devices on the platform. Alarming is provided both in native and customized forms. The user management window, seen here, handles the administration of tenant suites and can easily be extended for office administrators and building subcontractors. The file management window is yet another feature of the InteliGlas dashboard. This is where users can easily save and retrieve important tenant-related documents. InteliGlas, the smart building choice for building owners and their property management teams.
Okay, the investment ask here is that we presently have in safe agreements with angels 1.5 million raised from commercial real estate investors. They're the insiders that make up our angel group. We have additional 300,000 in our pipeline. These safe agreements have come with a 20% discount rate, conversion into a preferred stock, and the cap is realized at 36 months if there is no equity event at a preset valuation of 9.5 million. The investment ask here is $1 million in a safe agreement investment with a 30% discount rate, conversion to preferred stock with, again, the cap at 36 months at 9.5. If there's no equity event, it's $2 million or more. The use of funds are for sales headcount, marketing, and operations. We are already in Series A conversations with a number of VCs, and we're targeting October, November 2020. The exit, how you get your money back, is through an IPO, merger, or stock repurchase. We're targeting 3 years out from present for the liquidation event. We're forecasting 2.4 billion in company valuation, up to an 87% or 87-time return. Okay, the problem that we solve in the industry on whole is that there's a vacuum. There's a vacuum for owners and property facility managers. On the one hand, these buildings are fitted with Schneider Electric Johnson Controls Web Control as a building management system, but require trained personnel to access the platform. So owners and facility managers have no access to any of the data or control over the systems. The cloud platforms, the IoT platforms are very complex, and this is not a high-tech industry. So they don't know how, owners and facility managers don't know how to get their building systems up into the cloud. It represents this waste that occurs because of the non-management of these buildings is estimated by the U.S. Department of Energy at 55 billion, producing about 40% of the CO2 footprint in the nation, and 73% of the U.S. electrical grid is consumed by these mid-sized office properties. So the answer here is really InteliGlas's owner and facility team dashboard that allows data access and direct control of the systems by the owners and facility managers. And also we have an extension module out to tenants so that they can control their own space. This is all about empowering the owners and the facility managers of these properties. All right, thank you very much. That's the presentation.
I think we're pretty close to our time there. So we have maybe one quick question from some extremely interested person. Anybody want to make a quick question? One thing to remember for everyone is that this is mostly, you know what they say about a meeting with a venture capitalist is to get another meeting. And so what we're talking about here is an intro with your materials, and then you're going to have a follow-up from all the investors, and some of whom I see are not on the list today. So that's to keep in mind that we will have the opportunity to, you will have the opportunity to show your materials to and continue the dialogue with the investors. So now AndyFinch is not ready yet. He's not logged on yet. He had a meeting until 11 and it's 10:59. So what we should do is go skip over Andy and go to Mike Mountford, and then we'll come back to Andy after Mike. So Mike Mountford, if you would tool up and get ready here, and I can make you the host, so you can share your screen. You need to unmute yourself. There you go. Can I hear you speak, Mike?
Hello.
You're there. Okay. Now I'm going to make you the host, and you can't keep it forever now. You got to give it back to me, okay, when you're done.
I'll try.
Okay, let me find you here on the list. There we go. Okay, and make host. And now you're the host. And if you would share it, you're to share your screen in order for us to see your presentation.
Okay, I'm trying and it's not sharing.
Okay, just click on share screen down there.
I have. Okay.
Well, actually, what you have to do is you click on share this. There you go. Now we're seeing it. Okay.
Okay.
And you click on your PowerPoint and it'll show.
Okay.
There we go. We see it.
Getting there. Okay.
Perfect.
All right, we ready? I just want to take a lozenge because my throat gets dry quickly, especially in this Arizona air. Hi, my name is Michael Mountford, and my company is mySongbird. I got to tell you, this is a big venture. We are still in our startup phase. However, we are almost ready to launch. In fact, we will be launching next month, well, actually in September. I am going to give you a quick overview. I'm glad Gene said what he just said, because I am not going to try and sell you on this company. It's too big, too much to tell you. I anticipate this company will have a valuation in the $50 billion range in 2025. And I'll show you some numbers in a few minutes to validate that. So what I want to do is try and get you to call me to follow up on this. So the first thing I'd like you to do is to write my phone number down. My phone number is 317-714-1793. And my email is mike@mysongbird.com. And if you didn't
Mike,
get
you can also put that in chat, and that'll be in the chat permanently. So everybody, send it to everyone. You'll have your phone number and your email in chat. And that goes for everyone else too, if you want to put your phone number and your email in chat when you do your pitch.
Okay, great. All right, this company is probably a startup that is a very rare startup because we have great experienced leadership. We have an awesome opportunity, and we have big payoffs with a great exit opportunity. Lots of companies who gonna want to buy us very quickly out of the chute. Let me talk about the team. First of all, I have had 30 years experience in the satellite TV area, cable TV programming experience. I have made money in 4 out of 4 businesses that I've started up. I'm an entrepreneur and been very successful. In 2010, I retired at age 55. Actually, I started my first business at the age of 27. And like I said, I've made money for investors 4 out of 4 opportunities, and I intend to make more money for investors this time. So you ought to think about that. This business is in the music industry. So I needed somebody to help me with the music industry because I've not been in the music industry. So I went out and found the best guy I could find anywhere in the country. His name is Stephen Prendergast. He is our executive vice president. He was an executive vice president with Live Nation for 7 years. We're in the concert business. Live Nation is the biggest concert promoter in the country. The guy knows all about the music industry. Great guy. Our other VP is Megan Thornton. She was an electric engineer in college. She was recruited by the National Computing Center right out of college, got bored there after 2 years, went to work for George Lucas at Industrial Light and Magic. Great kid, smart lady. Bob Angone is our creative director. He worked for Leo Burnett, one of the top advertising agencies in the country. And then he went to work for Sears when Sears was Sears and not Kmart. Enough said. Mark Landsberg, he's not on our team. Oh, and I should flip the thing to our team. Sorry, I am not big on, yeah, come on, slideshow. Okay, sorry about that, guys. I'm not tech. Okay, there we go. There's our team. Anyway, but Mark Landsberg's not on the slide because he is our marketing agency. But I want to say a couple things about him because he's already invested in our company. He and I are the 2 investors. I've invested $1 million in this business myself personally. and my wife, yeah, she's also invested. She stopped it at $1 million. I could have invested more, but I stopped at $1 million because of her. But anyway, yes, we've invested $1 million as a family, and Mark has invested 200,000. Mark ran 2 agencies in his history. One McCann a division of McCann in New York. And he's also run a division of Leo Burnett in Chicago, another top agency in the country. So great agency. And he's also run a investment firm for 3 years. He looked at our proposal, our startup, and he said, okay, I'm going to invest in you guys. So he's invested $200,000. So we've already got our first investor, and it's our agency. Not bad. Not only that, but we also have talked to people out of the, like I said, technology and me are not the best friends. Outside of the agency and the music business, in the last few months, we've started getting people who want to work with us. A guy named Seth Friedman. This guy's last job before COVID was managing U2. I'm sure you all have heard of U2, the band. This guy was their manager. He's now working with us. He's getting us acts lined up and is going to land them for us. Another person is Linda Lewis, Left of Center Productions. She is working with a lot of bands in the left side of things, but she puts on Pride events all over the world. She's got great contacts, and she's on our team because she loves the idea. Matt Verba, you probably not heard of his name. He's an artist, but he's not an artist who you've heard of. He's a country guy, but he is in the Country Hall of Fame as a songwriter. He's a great songwriter, and he's heard, and he can't help us enough. He wants to help us more. So, okay, so what's the opportunity here? We'll flip through a couple of slides if we can do this correctly, Mike. You can all look through these big numbers, great numbers, and all put together, but I'm going to let you do that on your own. I do want you to look at the 64% of consumer, that thing, and so on and so forth. We've already got agreements with Dish and Sling to be on their platforms because I know Charlie Ergen, the CEO, the chairman of the board, I guess is what he is now. But anyway, so I want to flip down to a, yeah, let's just go, come on, slides. I'm bad with slides. Anyway, I'll get there. So, yeah, we're just going to leave it here. That's what that's kind of a picture of what the website will look like, and eventually it'll be on your TV screen. We're going to be the concert destination for music and concerts. We're going to be the ESPN of music, of concerts. There is no destination right now. Right now, people pay real good money, right, to go to football games. They pay real good money to go to concerts, right? And then they come home and they watch football on TV. And they watch concerts on TV, right? No. Nobody watches concerts on TV. Why? Well, folks, if you remember back, most of you guys, I can tell, were around, or not quite around, but you can remember, TV came on, and it came on with a little speaker, a little 3.5-inch speaker, and music didn't translate. People couldn't really grasp the feeling of music through that little 3.5-inch tinny speaker. So what did the consumer electronics industry do? Did they develop it? No, they went over to the hi-fi and to the stereo, and they developed music over there. And so everybody listened to music as an audio platform, not as a visual platform. And that's where it grew. So everybody left music from the TV and went there. And also, if you think about TV and how you watch TV channels, you can't get the choice. All TV can do with a concert is show one concert at 8, another concert at 10, another concert at 12. That's not choice. You ever drive down the street with somebody who plays with the radio knob all the time and You ever see the albums stacked up when people used to have albums, or the CD racks? People want choice in music. We're going to give them choice. We're going to collect up to 10,000 concerts for you guys to choose from. Oh, not just you, a 2-year-old to a 102-year-old. I've seen concerts with my dad, and he loves Frank Sinatra in concert. Yes, it's going to be for everybody. And that's who's going to be subscribing to our channel. We are also going to have a new way to watch concerts, an interactive way, and I can't tell you about that. You're going to have to sign an NDA for me to tell you about that, because that's our exclusive technology, and that's what we're coming up with, and I've got a guy who can do that. So let's move forward onto some quick numbers, because again, I will actually show you these numbers, and I'll give you my spreadsheet when you talk to me on the phone. I'll let you pull it apart and look at all the formulas, because they work. I've dumbed them down, but right now I just want to show you that this one big number here, 52% of 5 big, there's actually 4 revenue streams here, but there's really 5, because the free ad, TV support, and merchandise are included in one, so there's actually 5. This number we'll come back to. But here's the big numbers, and you got pictures are in my way. Okay, so
Mike, we got about a minute for you.
What I want to point out is 2025. I think I'm at the end of my time, but let me just point out this one thing. The 2,405 number at the end of 25, our revenue. I built that, and myself and Stephen Prendergast built these numbers from the bottom up with all these other numbers. I guess I showed by the pointer. All these numbers built up to the 2.4 billion, and we built that. And then I actually went back when I was building the slides, and this slide came in from some research we did based on the average of 5% revenue on the amount of customers who are streaming. I couldn't believe it. That actual number came up as a 5% of the market share. I went, holy cow, how did we come to that? I did not plug that number. That number was there, and that's where it is. And so I was amazed. I know you probably think I plugged it, and I would think I plugged it too. Hey, I've been on your side of the table for many, many deals. I've invested in deals. I've been in the Irish Angels. I'm a Notre Dame grad. I was in the Irish Angels. Let me just say about exiting, because I know I got to get out of here. But Disney, Viacom, Amazon, Apple, Live Nation, they all will want to buy us once we're out there showing our wares. Sorry I took too much time. Please call me. You got my number. Thanks. I can turn this over. No, I'm sorry. I took too much time. Thank you.
Okay, Mike, we can let you get some questions by email, and we have to move on if we can.
Yes.
Now, the next person up is Andy Finch with IT Biometrics. And Andy, if you'll turn on your video and get ready to share your screen, and I will turn over the hosting to you.
Okay.
Did you get it back?
Yes, I'm all set now. I'm the host now, and then Andy is going to take over as the host and is going to share on his screen his PowerPoint. IT Biometrics, Andy Finch, everyone. And I am going to make you the host, Andy. And if you could leave my audio on. There we go. And then Andy's going to mute everyone else. Change host. Here we go. I think you're the host now, Andy. Is the host now? Yes, you're all set.
Excellent. Okay. Can you see the screen?
Yes, yes, it looks great.
Excellent. Okay. So I'd like to talk about IT Biometrics as a company, and I'd like to highlight a few products that are the first of many. Our goal is to be the foremost biometric authentication company in the world, and we've got a great starting point with several hardware solutions. The first of which is the ITBX cold wallet. Those of you that might be familiar with blockchain or decentralized ledger technology applications are familiar with one of the challenges that exists, which is managing public and private keys for all things blockchain, whether it's a supply chain, whether it's medical, whether it is a distributed ledger technology by Bank of America. Any of those solutions, the core of the technology utilizes encryption. And for encryption to work, there needs to be two keys, a public and a private key that handshake in order to authenticate identity or provide access to certain data. And so we have a wallet that, whether it's cryptocurrency, digital currency, or whether it is many other blockchain or decentralized ledger technologies, all of them need to manage those keys. And so we have a hardware device that does that. We have a couple of unique value propositions as it relates to products that are currently on the market. One of which is the difficulty and hassle of PINs, passwords, and or passphrases that are required to authenticate that identity. In many cases, as you purchase a new wallet, a hardware wallet, and you receive that, it can take 45 minutes to an hour and 15 minutes to actually set that up, to enable the device to do what it's supposed to do for you. And that is preventing many newcomers into this space because of the friction. It also requires, its purpose is to securely manage the 64-character private key, which again exists whether it's Bank of America or whether it is a healthcare system. No matter who's using it, the encryption fundamentals are the same. The other great solution that we offer is multi-signature. So where you have multiple people that need to authorize a transaction, that need to be involved in the authentication process, we are unique in being able to provide multiple signatures for the release of that data or the access to that site or whatever the application is. So we do this using enhanced biometrics. These biometrics, so if you have, and I would imagine most of us do, have a smartphone or even a laptop or personal computer that's enabled with biometrics. The biometrics are very straightforward, very simple on those devices, and they can actually be spoofed. They can be hacked. And so our biometrics that we have integrated into this device is unique in that we detect a thermal signature from the person that's applying their finger, as well as measuring blood flow. So we can tell whether this is a live person, and we can also get a signature based on the live characteristics that it is indeed this person that's presenting the fingerprint. So we do that as an added layer. Now, another problem that exists is fraud, identity theft and fraud. And we have, beyond just a crypto solution, we have a biometric credentialing device that uses some of the same technology on the biometric side, but it is applied in different ways. So this obviously can reduce fraud, because not only are you authenticating, let's say, a credit card. In this case, we have Visa or MasterCard and other payment processing platforms that have to validate the credit card number, the code on the back, the expiration date of the card, etc., to try and triangulate that this is the real person that is the owner of that card. Even when you go to a gas station and you fill up, it's asking you to put in a zip code as a form of authentication. What we're talking about here is being able to integrate, and we do have, we've started a relationship with Visa, and we're in early stages with MasterCard of doing some integration where they have APIs, application tools that allow us to connect our device to their rails so that our device can be a method of authentication. Two-factor authentication is something you guys are probably familiar with. And so the biometric device doesn't necessarily require the zip code of the person or something like that. They would actually do this with biometrics. It also enables much safer online purchases. One of the reasons why Amazon has been so successful at onboarding people is because people don't have to put their credit card information in all of the different sites to buy all these different products. They can have their information stored electronically on the Amazon site, and then Amazon processes the payment when they purchase something. This would enable people to not only use it on Amazon, but use it on other sites where the authentication could be provided biometrically. Yet we have another problem that has come up just in recent times, which is COVID-19, which is not likely to go away anytime soon, certainly in terms of practice and how we treat public. We have a dynamic facial recognition device, the remote temperature check, that enables people to both scan their face to do a facial recognition. That's the form of biometrics. We also have a product that has a facial recognition and or a fingerprint. You can use one or the other or both. But then it also does a temperature check at the same time. So think of a business, a manufacturing plant where people can't work remotely. They need to come into the factory in order to produce the goods. This device would be stored on the exterior of the building at the access points. As people come in, it would not only know that it's them via facial recognition and fingerprint, but it would also know that they're healthy. That data gets sent back to the central database within the company's servers that not only becomes a time card to allow people to check in as a time card, but also provides information related to fever and health. So it can store a lot of different people, up to 3,000 people, but there are versions of this type of product that can store up to 10,000 users. So who do we have working on these three different products? We've got a very multidisciplinary development team that has expertise across design, manufacturing on the hardware side, as well as software and firmware capabilities. Because as you can imagine, these products are going to have to integrate. Anything that we do will have to integrate with something, whether it's the ITBX that integrates with the blockchain, or exchanges that would integrate with IT systems and security systems of a facility. So myself, as the CEO, Andy Finch, I have experience with both startups as well as large multinationals at getting products to market. Tony Zakula is the CTO. He has built successfully several businesses and has particular experience in the fintech space. He currently operates a company with about 50 software developers that has contributed meaningfully to our team. And then Howard Prager, the chairman, founder, and really the chief visionary officer of our company. Many of the ideas and the concepts of what should we make and why should we make them, they are coming from Howard. We also have some great advisors on our board. Scott has got experience on the financial side working with Citibank. Mick Davis has got encryption, has worked with the Pentagon in cybersecurity, works with NSA, etc. And Subra, who is an IT professional and has a lot of vast experience in everything from mathematics to current information technology. So they provide a wealth of knowledge in their own expertise, domain of expertise for our company. Really, for any startup company, it's about global distribution and scale. It's about how do you take a small product or a small idea and scale that up. We have experience doing that, all of us in our different areas of expertise, to scale the business from a concept to revenue. What we're asking for is $1 million of hardware development and the applications, the software applications that go with them. We have some functional devices now that we have used in demonstration, and we need to scale that beyond the demonstration mode and get it tested. Also the marketing and the sales side, and ramping up the manufacturing, getting the manufacturing set up, as well as an IPO. We're offering a Reg D right now. We have a current offering that's on the table, and discounts will be applied to the IPO shares. So that would be the vehicle that we would envision certified investors to be able to participate. So this is our contact information as far as our emails are concerned. If you would like to learn more about each individual product, because obviously this doesn't have time to go into every use case or the product technology, please reach out to us. We'd be very interested in having a follow-on conversation.
Thank you, Andy. I'm going to reclaim the host here. Does anyone have a quick question? You'll be getting the materials, and if no one has a question, I'm going to turn this over to David, who needs to be unmuted. Let's see here. David, where'd you go, David? David's not on now, so what I'm going to have to do is turn this over to, I'm going to turn this over to Jason with OM Spirits. And so Jason, if you can join, get ready, and I will share a screen with you. I'll make you the host.
Okay, I can share.
Let me see here. How can I do that? Jason.
I believe I'm able to share without you making me the host. Oh no, you have to.
No, I have to make you the host. I don't see your name on here. What's wrong here? Oh, there you are up top. Okay, make host. And you are now the host and can share your screen.
Great. All right. Hi, everyone. My name is Jason Monkarsh. I am the CEO and co-founder of OM Spirits. We make a line of certified organic, better for you liqueurs. Our product has been around for, well, hold on. We've been around, we came up with the idea about 10 years ago when I was trying to make a cocktail for my wife and some friends, and had a huge disaster compared to what I experienced out in the real world. And so light bulb kind of went off, and I thought maybe there's a way to sort of simplify this process for the at-home entertainer and type of bar accounts that are aspirational mixology bars. And so I went out and partnered up with a woman named Natalie Bovis, who I originally hired as a consultant. And what we came up with was OM, which is an acronym for Organic Mixology. We have 4 different flavor profiles. And since we've launched, we've won multiple tasting awards, but not only tasting awards, innovation awards from the National Restaurant Association, entrepreneur awards from Nightclub and Bar Magazine. We've got 4 different flavors: a dark chocolate sea salt, Meyer lemon ginger, coconut lychee, and a vanilla and rose. And one thing that we came up with during COVID is we're an innovation on a canned spiked cold brew that'll be in a much lower price point as we shift our sales more to retail and direct to consumer based on what's going on in the world. So why OM? Consumers are really, as you all know, increasingly focused on health and wellness in food and beverage. And this is translated over to the spirits business for the past few years, where people are demanding lower alcohol products. Now, to a lot of us, that may sound counterintuitive, like you're going to pay for a low alcohol cocktail, but it really is a trend that's become mainstream lately. And liqueurs, the category that we're in, really lend themselves nicely to this because you can use a liqueur as a base for a cocktail and have a nice low alcohol drink that can be enjoyed during the daytime without getting, you know, completely smashed. The product differentiates itself quite a bit because we're much lower in sugar than anything else that's out there on the market as well. Especially now, as you guys know, the current environment, I mean, retail sales, alcohol retail sales are exploding right now. We were primarily working with restaurants, bars, hotels, some of the, you know, biggest names in the group that I'll touch on in a little bit. But there's been a huge shift in at-home consumption. And so we, during COVID, built out a direct-to-consumer website. We can now ship to consumers in about 38 states. And we've been chasing down some of the bigger retail chains because people right now, they want something that, you know, there's a segment of the population that just wants to pop something open with a can, but there's also people who still like to make a drink, and makes that easier and able to do in like 2 or 3 steps without being too complicated or intimidating. Something that's probably interesting to you guys is that we have secured a major strategic investor. I'm not going to name them on this call, but I think inadvertently their name went out in the package that the investors got. That's fine, because I do tell investors about it on the phone. But they're the biggest private spirits company in the world. They've never invested in a brand this early on before. They really believed in our team and what we're up to. And you know, as far as my experience, like you know, I could tell you a million things I've done, but the most relevant thing is building this brand, getting it into places like Whole Foods and MGM Resorts and Total Wine, and negotiating an investment from one of the largest spirits groups in the world. Natalie, her most relevant experience is she's named 1 in 4 women leading the liquor industry, very highly respected in the industry. And then another thing that we did recently was we negotiated a national wholesale deal with a company called the Gennadiy Companies. They're the 7th largest liquor distributor in the country, and they have an importing division whereby we are able to now sell to them and take a little bit lower of a margin, and then they wholesale it out to all the other liquor wholesalers in the country. So that really leaves our focus on marketing and very, very high level sales, while they're letting us kind of co-manage their sales teams around the country, and we don't have to deal with so much distributor oversight. So effectively, that deal was like us raising a bunch of money to go hire a bunch more people without having to do so. That's a fantastic deal that came into play January. Things slowed a little bit because of COVID, but we just made the official announcement with them yesterday on the national deal. Liqueurs and cordials, big market, $86 billion in 2018, $131 billion by 2023. And the global RTD market, which we're getting into with the cans, is exploding as well right now with all the hard seltzers. And we really think, and a lot of other people as well, that the tea and coffee spiked beverages are the next to hit. So our immediate roadmap is to continue. We've already built out our consumer website, but really push some branding and marketing towards that. Continue branding partnerships with some of the large brands that we have contacts with. Some key hires, distributor incentives to get their sales teams, you know, out pushing our products. And some of our charitable initiatives, we implemented a $1 per bottle sold program to support the United States Bartenders Guild Relief Fund, which was something that was created during COVID. And then we also plant 1 tree for every bottle we sell, and we've planted thousands of trees to date since we launched the brand. Highlight of our current distribution, Southern Wine and Spirits is one of our distributors in California and Nevada, Gennadiy, who I mentioned, and they're expanding us across the country right now within their distributor network. We're in Whole Foods in the Southern Pacific region, Total Wine. Obviously, all these on-premise accounts that we're working with have been hit pretty hard, but what we're actually hearing from them is that they like products like ours because, you know, with COVID, there's not as much staff, there's not as much ability to prep fresh ingredients. People don't want to be overbuying stuff that's going to go to waste, and so they really like the idea of a multi-flavor note liqueur that can help them create cocktails quickly and consistently over time. So that's something that's going to continue post-COVID, and we think that's a big benefit for us on premise. And then we're just going after really strongly these accounts right now through our chain team connections. Some comparable liqueur products, you know, you've got the classic Grand Marniers, Kahlúas, St. Germain's. These have all exited recently. The older ones and some of the newer ones have exited recently. And again, the difference between us and them is we're a light, lower sugar, sort of like the new school alternative to these traditional liqueurs. So we're really, you know, kind of disrupting that space a little bit. Spiked coffee comparables, you're having big people enter the space, but nobody's doing anything organic. And we have the ability to launch that really quickly because our co-packer already makes some canned products or others, so we can get in there really quickly. I mentioned our sustainability initiative, so I'll skip over that for now. A lot of press, but we recently hired a new PR agency to help push this online initiative and direct to consumer. How we make money, just a little breakdown on, you know, cost versus sell versus profit, but you really make money in this investment. It's not like a real estate investment where you're going to get a distribution every quarter. I mean, really it's on the exit, and we've de-risked that quite a bit by bringing the strategic on already. You know, a lot of people start a consumer product and say, hey, we're going to have this big exit in a few years, and everyone kind of laughs at you like, yeah, it's pie in the sky, but we have the person on the cap table. There's no set like price they have to buy us out for. They have a ROFR to match third-party offers. And given the history and what they've done, there's multiple reasons to believe that once we get our volumes up, that they will be interested in taking us out. That's part of what this raise is for. So it's a $2 million raise. We have $1 million left in the round, $5 million pre-money valuation. Our strategic is hard-coded at a certain percentage in this round that I can get into more specifics with anybody who's interested in, but they get diluted in future rounds. Some of this money, you know, we brought in, so this is just on the 2 million. So we spent some of this already, but most of the funds are going to go towards marketing, driving sales, pushing sales, and building up some inventory to go after those larger accounts. Here's my info. There's a video deck link, and you guys all, I think, got an email with this information as well. So I think we have about 1 minute and 30 seconds left for questions. If there are any, feel free to ask. If not, you can send them to me via email.
Anyone have any questions for Jason? Jason, that was an excellent presentation. I'm going to take over back, reclaim my hosting for the moment. And David has not come back on yet, so I'm going to try to summarize here for a moment. And I have David was going to let me say a few words at the end here, and what I'd like to do is bring on also, let me see, how do I make everybody also bring on Jason? I'm going to unmute Jason, because I have Jason Fishman, who's a good friend of mine and someone who I work with on a regular basis, because Jason is, let's see, where'd you go, Jason? Are you still there? He's off now for some reason. I'm known as a person who's very knowledgeable in crowdfunding, and you can actually replace the word crowdfunding with marketing, because in crowdfunding you can take your offering and market it to the crowd through platforms like Start Engine and Seed Invest, and that's what we help companies do. That's what MediaShares does. And we work with, I did have Jason Fishman on here. He must have had to take a call. So
hey, Jason, I'm on here as well too.
Oh, you're back now, okay. Jason's company just got $5 million for a pre-revenue company on a $200 million valuation. And Jason, you want to tell them a little bit about how you do that kind of thing?
Yeah. Happy to. Thanks for inviting me on. I've attended this conference in person last year, so excited to be on the digital format. A lot of digital conferences these days. We're hosting bi-weekly webinars, podcasts, so love taking advantage of the video format. Not only video numbers are up, but digital traffic, of course, and equity crowdfunding. If you look at the numbers on platforms like Crowd, which show overall analytics across the top platforms, WeFunder, Republic, Seed Invest, team is in May, that was raised in June. Equity crowdfunding is up. You're
going in and out, Jason. You're dropping out.
Oh no. Okay, let me know if that keeps occurring here. But with the increases in traffic, the volume is higher than ever as well. So, you know, being able to speak to that and the most successful campaigns, you can see marketing as a common factor there. So, starting with a full digital strategy, looking at real-time data for the top campaigns. As you can imagine, things in July are much different than they were in April, March, or even last year. A full strategy. Then we've been dating in 3 areas of focus: content marketing, advertising, and direct outreach. You have the ability to contact historical investors on these platforms, individuals who are taking part in each deal. And that's a lot of the value that the platforms are bringing, is a consistent conversion rate, as well as that premium, very active audience. So we get to play a role in that. We'll bring in, let's say, an average of 1,000 investors at around $1,000 each to hit a full Reg CF, which is a $1.07 million goal cap. And it's becoming more and more common that groups are hitting that full limit over the past few months here. I know certainly in our client list, the Reg A pluses, and as Gene was mentioning too there, groups that were hitting 5 million or over on, there's actually a $50 million cap on there, but it's of course all based on valuation, are growing in terms of success, in terms of popularity, overall approval process by the SEC, and everything that's being submitted to them has actually been streamlined in many cases over the past few months. So we're seeing growth across the whole vertical at the moment. We're sharing insights and different actionable recommendations from our experience, from our expertise. We've actually worked on over 150 fundraising campaigns to date. Over 100 of those have been equity crowdfunding specifically. So not only can we talk about what's working, what's not working, but offer to bring our audiences to the table for these type of groups. So happy to answer any questions about that on this discussion here today. Or Gene, dive further into any of the tactics.
Jason, what we got to do is you should put your information in the chat, your contact information in the chat, and
sure.
We have to go now because a lot of people are have to move on to their businesses. But Jason, there's David coming back now. David wants to wrap up the. David, you want to wrap up the meeting and close out with whatever you want to say?
Yes, sir. Am I on?
You're on. We don't see your picture, but we see your name.
Okay, I'll go with my name. First of all, I'm glad that you had a chance to tell about media shares and your capabilities and stuff, which have also been obviously demonstrated by running this meeting today. So we thank you very much for that and for your advice, not just in the meeting, but in everything we're doing. I also want to say quick thanks to Patrick Henry from University of Southern California, who I think is still with us, and Don Castle, Chairman Emeritus of Tech Coast Angels. Both of them gave us advice based on our last meeting to upgrade this session, and we've taken a lot of that advice, and so thanks to them as well as to Eugene. Let me just mention in closing, this meeting is like a tip of the iceberg. We spent a couple of hours here, but a substantial amount and considerably more than 2 hours are going to be spent in terms of the interface between the 13 investor group and these 6 deals. The investors are going to be sending emails, commentary based on the materials of the deals. We're going to send out to the investors not just the copies of their PowerPoint, but also their exec summary and their management team. So that's going to be studied and it's going to be commented on by this investor group, which, as I said earlier, represents about 600 qualified investors. So there's a lot that's going to happen. Some of it will happen this afternoon, but it's going to go over the next few days, in fact, really over the next couple of weeks, and there will be some interchange. And so we're really pleased with that aspect of the meeting, which we could not do live. We can do it online. So, Gene, there's some real advantages. And thank you again for what you've done here. And we're looking forward to continuing the conversations with the email exchange. Anything else, Gene, before we wrap up? I think we're good.
No, just thank you for everyone. And thank you for our guest, Jason, who we work with. Actually, Jason is his firm DNA is doing the IT biometrics offering coming up on Start Engine. So we're pretty excited about that. And if anyone else would like to know more about opportunities in the crowdfunding space on platforms, please reach out to me, because right now those platforms are having their best months ever because of this disease that we've all been scared with. Right now, all the platforms are doing most of the financing in the world. So reach out to us if you're interested in that. And thank you, David, for the opportunity to be here today. We've got a recording of this, which I will put on YouTube at some point. So everybody will have the opportunity to have a long tail, as they say, on this type of presentation. Thank you, David.
Thank you, Gene. Great job. Great job to the 6 presenters. Beautiful job.
Thanks to everyone. We'll talk to you next time.